Joining me right now is IHS Markit Vice Chairman, the author of The New Map, Energy, Climate, and Clash of Nations. Daniel Yergin is here. Dan, it's great to see you. Congrats on the new book.
Thank you very much.
The middle of it right now, and I love the issue that you put front and center, and that is how a transition from fossil fuel is continuing to be quite complicated. Walk us through that transition and how you see things today, Dan.
Well, there is clearly wind and solar becoming a larger part of the mix. There's a big government push to do that around the issues of climate. But I think that oil and gas are going to remain a part of the energy mix for a long time. So it will be a mix. There are a lot of, we have an $86 trillion world economy, $22 trillion U.S. economy, 80% dependent upon oil, gas, and coal. You don't change that overnight.
Yeah, I love the story that you write in this piece that I read about the energy transition and why it will be so complicated in the Atlantic. And you talk about the story of this one company, Innovex Downhole Solutions, which is a Texas-based company that provides technical services to the oil and gas industry. They wanted to order 400 North Face jackets, but North Face said, no, we can't sell you our vests because we don't want to do business with a company in the category of selling oil. And what did they find?
Well, first of all, they said that oil companies are in the same business as sex and pornography. But then it turned out that if you have a North Face jacket, it's somewhere about 90% made out of petroleum product. And it turns out that it's also made in Asia, and it's shipped to the United States in container ships that run on oil. And by the way, the company owns several corporate jets that run on jet fuel. So on the one hand, they say they don't want to have anything to do with oil because it's bad for their brand. But their whole company depends not only on customers, depends on oil.
This is unbelievable. Dan, look, the administration and the Democrats are pushing forth this clean energy agenda, the Green New Deal, and gasoline prices are soaring across the country. Some drivers paying nearly $5 a gallon. What are you expecting from OPEC at this meeting today? And what about the move in prices? Higher prices on goods because of inflation has many people struggling.
Well, absolutely. And the supply chain problems that everybody talks about, that's one of the things driving up, contributing to inflation, as well as, of course, all the money that's been poured into the economy. I think in terms of OPEC Plus, oil prices had risen very sharply. They're down 15–20% now, partly because of Omicron, partly because the administration says it's going to use the Strategic Petroleum Reserve, put more oil into the market. And I think that everybody's uncertain about the virus, and that includes the people who are meeting among OPEC and OPEC Plus what to do, whether the economy is going to slow or they're going to have a slowdown again because of the virus. So it's really up in the air from last week to this week. What a change.
It's an incredible change, Dan, but at one point, America was energy independent. This administration came in, canceled pipelines, and that certainly had an impact in terms of the supply of oil on the market. How long does that transition take to get back to being energy independent? And do you see a day when America will be once again?
Well, I think we're still pretty close. It's an incredible achievement. 8 presidents said we should be energy independent, and it was a joke. We became energy independent, and it's a very significant thing, not only for oil supplies, but for the overall economy, for the role of the United States in the world. I think we're going to see next year, we're going to see U.S. oil production, all things being equal, actually increasing about 800,000 barrels a day, which would mean that we would get back to that. But policy will matter, and policy matters a lot right now. And this administration doesn't pay as much attention or really to the question of energy independence, but it's a very valuable thing for this country, and we shouldn't let it go.
Do you think OPEC will make any changes in terms of its OPEC output?
Well, I think they're, I bet they're meeting right now, deliberating it. I would tend to think that they'll look at the virus and say we should slow things down that in terms of increasing oil, which they were putting into the market. Also, of course, they've seen the U.S. declare that it's going to use the Strategic Petroleum Reserve. could well be wrong on that, but I think that's the question that they're asking themselves, and I don't think they have an answer, even though they're meeting this week and have to have an answer. But I think the Omicron is such a big deal for everybody that it's going to make people more cautious, and we've seen the impact that it's had on the financial markets.
Dan, in the coming year, it sounds like you believe oil prices are going back down. Is that your best case, or do you think that we're going to talk about $100 a barrel oil again soon?
Well, it's funny, Maria. A month ago, people were talking about $100 barrel oil. That's off the table. I think prices are going to kind of be in the $65 to $85 range, give or take, is where we'll see prices over the next few years, at least from where we are today.
Dan, it's a great book. We so appreciate you coming on the show this morning. Please come back soon. Thank you, sir.
Thank you. Thank you. Bye-bye.
Daniel Yergin joining us this morning.